All right, let's jump right in. Today, we are decoding one of the absolute core concepts of technical analysis, something that will literally transform how you see the market. We're not just drawing lines on a chart here. We're going to understand the very structure of price movement, giving you a blueprint for much smarter, more strategic trading. So you got to ask yourself, is the market just total chaos, or is there something else going on? Well, the answer is a hard no. It is not random. And over the next few minutes, we're going to peel back the layers and show you the market's hidden blueprint. We'll dig into why it forms, how you can actually draw it on your own charts, and, most importantly, how to use it to become a more strategic, more professional trader.
Okay, so let's get into it. At its absolute core, support and resistance are, well, they're simply the floors and ceilings that the price tends to respect. Think of them as these horizontal zones that show you where the big battles between buyers and sellers have hit a turning point in the past.
So let's break down support first. This is a price zone where buyers have historically stepped up to the plate with enough force to stop a price from falling any further. It's like a structural floor where you can expect buyers to be waiting, ready to soak up all the selling pressure and cause the price to bounce. And you guessed it, on the flip side, we've got resistance. This is that price ceiling where the sellers take back control. At this level, there's just so much supply of the asset that it completely overwhelms any buying enthusiasm, making it incredibly tough for the price to go any higher. And that often leads to a pretty sharp rejection downwards. Now, here's the part that's really fascinating: the why behind all this. These levels aren't some kind of magic. They're not just random lines. They are so powerful because they are basically self-fulfilling prophecies. And they're driven entirely by human psychology and the collective memory of everyone in the market. And this slide really shows you how that psychological engine works. See, traders remember where the price turned around before, and because they remember, both huge institutions and regular retail traders, well, they tend to pile up their buy and sell orders right around those known levels. This creates this powerful, self-reinforcing cycle, where the very anticipation of a reaction actually creates the reaction itself. It's pretty wild. So the big question is, how do we actually find and draw these levels on our own charts? Okay, here's the most important thing you need to hear. Stop thinking in terms of precise single lines. The market is just rarely that clean and simple. You know, professionals think in zones. They draw ranges to account for all the market noise and those little price spikes. So what you want to do is look for clusters, areas where the price has reversed multiple times. Then you draw a little box, a zone, that captures those turning points. And here's a pro tip. The more times a zone has been tested and has held, the stronger and more important it is. Oh, and always remember, what happened last week is way more important than what happened 5 years ago. Okay, now let's see how this all builds into a really powerful trading tool. We're moving from just identifying levels to actually using them to build a strategy. And it all kicks off with a super cool concept called the polarity principle. And this, right here, shows that principle in action beautifully. Check it out. When a resistance ceiling is broken, really broken decisively, its role often flips. Price will very often pull back to retest that old ceiling, but now it acts as a brand new support floor. This role reversal is one of the most reliable patterns you'll find, and of course, the exact same thing happens in reverse when a support level breaks. So this chart basically gives you a game plan, a concrete framework for building trades around these levels. You've got a couple of main plays. You can either trade a bounce off an existing support level or a rejection from resistance. Or you can play that breakout and retest pattern we just talked about. But look closely. In every single one of these scenarios, notice where the stop loss is. It's placed just outside the zone, never right on it. And your target? It's the next logical level in the other direction. Now, before you run off and start drawing zones all over your charts, let's talk about 3 really common traps that catch new traders off guard all the time. Seriously, avoiding these is absolutely key. First up, and yeah, we've mentioned this before, but it's so important, I'm going to say it again, the market is messy. Amateurs draw a single, rigid line. Professionals draw a flexible zone. That simple shift in thinking gives your analysis room to breathe and stops you from getting shaken out by those annoying little price wicks that just briefly poke through a level. Second, you have got to zoom out. Always look at the bigger picture. That little support zone you found on a 5-minute chart, it's pretty much meaningless if the price is, at that very moment, slamming into a massive resistance level on the weekly chart. Higher time frame levels will always win. Context is everything. And finally, this is a huge one for risk management. Never ever place your stop loss order exactly on the support or resistance line. You have to give your trade some breathing room. Put it just outside the zone. This is how you avoid getting knocked out of a perfectly good trade by a little bit of volatility, or what some people call stop hunting. So, here's the bottom line. Support and resistance aren't just lines on a screen. They are a map of the market's collective memory, a blueprint of where the big battles between buyers and sellers are most likely to be fought. And when you learn to read this map, you stop just reacting to market noise and you start strategically planning your trades with precision. So the only question left is, now that you see the blueprint, where are you going to build your next trade?